2 days ago, I just closed out my $2,300 trade on NASDAQ buys. I'm gonna show you guys the screens here. And before the breakdown, guys, I just want to give you some tips how to trade live accounts and how to trade challenges. I want you guys to understand the difference between a funded account and between a challenge, right? Because on a challenge, think about on a challenge that, hey, I'm not trading $50,000 capital. I'm not trading $100,000 capital. I just took $200, $500 from my money. I invested it into an account and it has the possibility to give me this capital, right? 50K, 100K. But at the current stage, it's not that. It's $200 or $500. So don't be scared to risk heavy on challenges. Don't be scared to take even A- buy setups, B setups, excuse me. Just don't treat challenge as a live account. And don't treat live account as a challenge. It's the same thing, because if you are going to be trading aggressively on a live account, you can blow it like easily, right? For me, like I waited for this setup 4 days, I secured 2.3K and I'm good. I'm waiting for a payout. Like it's going to be around $2,000. I'm good. On to the next one, right? And in between those waiting, okay, I know I made 2.3K. Let me take that $500 from these 2.3K and buy a challenge. And let me scale my capital even more. If I fail, cool, I'm still in blues. If I pass it, great. I have like 100K of capital more right now. And I can make double the money right now. Treat your funded account really conservatively, secure the payouts, reinvest it into the challenges to scale capital as fast as possible. And challenge, don't treat challenge as your live account. Just go aggressive, risk 2% at least. There is no, 2 to 3%. I'm risking 2, depends. Also depends on your skill level. If you're a beginner, risk 1, don't go for 2. But yeah, there is no reason for you to be spending 1, 2, 3 months in a challenge which costs $200. There is no reason for that at all, right? And I'm not saying like don't do deadline, like you either pass it or blow it, doesn't matter. But I'm not saying don't be scared to go heavy, don't be scared to take even not that great setups, because it's all about probabilities. And listen, I'm super good of risking 2% on a 50K challenge if I know that it's only $200 of my money, if I lose 5 trades in a row, especially. So let's say 1 month pass by and I'm either 50K more funded or I fucking blew $200. It's not a big of a deal. So yeah, don't treat your funded account as a challenge. Don't treat the challenge as a live account, as a funded account. And let's jump straight into the breakdown. Trade happened on NASDAQ and the trade happened right here. I took a buy from here and I exited somewhere around here. Gonna explain everything, so let's go. So as you already know, I trade with a trend, I trade with a major direction. And what I realized was NASDAQ was trending down, right? Making series of lower highs and lower lows, which is a downtrend. And then price broke structure when price closed above this level, resulting a new higher high, resulting a new broken structure, which means market is right now bullish. So I want to take buys only. Now, let me find some level. Where can I take a buy from? So I had marked out this previous level of resistance and this previous level of support. Let's make it yellow. And why I marked this level out? So at 1, this is a previous level of structure, right? Where price broke it, retested it and went up, then retested multiple times. This is a previous levels of structure. This is a resistance level, support level. So at this current price, this is a key level for me. This is the strongest level where I can potentially take a trade from. So I know my direction based on H4 and daily is bullish. I know I'm trading at key level, which is as well H4. And now, also what I took into consideration, if you look at the weekly chart and if you look at how previous weekly candlestick closed, it closed like a huge bullish engulfing to the upside, which means when you see this type of markets, when the market rallies to the upside, pulls back a bit, and then you see support being created, and then you see weekly engulfing candlestick along with H4 structure being broken, that is a great confirmation. Higher the time frame, bigger the value, and that weekly engulfing candlestick was, to be honest, the main reason behind this trend. And also, as I said, this structure break right here. So we got a key level, we got direction. Now, I don't want to hop into buys immediately, even though we are at the level. What I want to see at my key level, which is this yellow line, lower time frame structure shift, which means structure needs to be shifted H1, M30, and 15. Let's drop down on H1. So on H1, as you can see, after price broke this market structure right here on the right, then price decided to make a resistance and pull back. Price pulled back exactly to that yellow zone, exactly to that key level, and on this H1 time frame formed a double bottom pattern, which is reversal pattern if you are in an uptrend. But if you don't want to use these patterns, it also shift market structure when price broke above this high on this H1 time frame. So right now H1 flipped bullish again after this broke structure to the downside, then price created double bottom and flipped structure back to the upside. So I know I'm at key level, I know weekly H4 daily is bullish, and right now I know after this H1 candlestick closed above this level, this resistance, that is broken structure again on H1, on M30 as well. So how I positioned myself was simple. When I saw this M30 engulfing candlestick closed above this resistance, which resulted in a broken structure to the upside on M30 and H1 time frame, I basically, after this engulfing candlestick closed, I placed my limit at this structure point. Let's mark it out as white. This was the structure point. I'm gonna show you guys the screens as well. At this structure point with a stop loss under this low, and with my TP being this level of resistance. Actually, my TP went here, but I closed the trade a little bit sooner. I'm gonna explain why. But that's the trade. That is the stop loss. This is the TP, and I think we're gonna get there. But the trade is closed anyways. I closed the trade somewhere here. I closed the trade. Now, when price broke it on H1, this level of resistance, the next day it went down in Asian session and in London session, tapped to this level of structure again, right? And went up from here. Because as you can see on H1, we never ever tested it, only with wicks. We tested it with only M30. So I was thinking of putting a break even, but when I look on H1, I was like, no, there is a really high probability that price is gonna come, retest it and go higher, which is exactly what happened. So that was the entry after this engulfing candlestick closed above this resistance, which is a broken structure, immediately putting buy limit at the previous structure point, because key levels for me are previous structure point or H4 daily level. So we were trending at H4 daily level, which is this yellow zone, and we broke structure on the M30 H1 time frame, which is this white zone, placing myself at the previous structure point, stop loss under the low, and target the next key level, which in this case is this zone right here. So now guys, I add the scale in as well on this entry, because if you look at H4 and after this engulfing candlestick on H4, which closed slightly, just slightly above these closures and above these closures, and closed as a H4 engulfing candlestick on this previous M30 structured resistance, I was like, cool, let me scale in into this position. So what I did was this original entry went break even exactly under this wick, which let's call it break even. Why? Because I knew that if market structure, this was the H4 closure, if market is gonna go higher, tap this original structure point and then go lower, that means market is gonna pull back more, right? So I set my stop losses at a break even, and after that H4 candlestick closed, I placed a buy entry. Actually, it was somewhere around right here. Stop loss at this previous break-evens under the lowest low, because remember, if price is gonna break this low, we are gonna go down anyways, little bit. So yeah, that was the scaling position, and I believe somewhere here I closed everything. I'm gonna show you guys the screens. I believe the price was 570, 580. Why did I close? I was up 2.3k US dollars. I was at one point I was like 2.5, but then I was like, cool, let me secure the profits before the pullback, because hey, I want to secure the profits. It's good, 2.3k, it's okay. It's on a one trade, the account was fresh, it was 100k, so I'm gonna be requesting a payout in like a week, in about a week, and the 2.3k, I was satisfied, right? So, whole idea behind this trade again, guys. So, weekly engulfing candlestick, which formed a level of support, which is the confirmation number 1. Daily, bullish as well. We tapped this previous high, which I didn't mention, it wasn't important for me. What was more important was this structure shift when price on H4 was trending down and then broke structure to the upside, resulting a higher high, resulting in a new bullish market. Then key level, which is this previous structure point, which is this resistance, and as you can see the reactions, price was rejecting this level heavily whenever price came to this level. So when price broke it, I was like, hey, let's wait for a retest. Waited for a retest, waited for a lower time frame structure shift, which happened right here. After this structure shift on the lower time frames happened, placed myself on a previous structure point, stop loss under the low, and TP the next level of support, the next level of resistance, key level, which is this white line. Closed it here because I told myself I'm going to close at 2.5. I hit 2.5, wanted to hold, price came down to 2.3, closed it immediately, right? But yeah, that's it guys for this breakdown. I hope you understand everything. Always start on a higher time frames and scale your way down to lower time frames to get the best possible entry. You need to know where you are at the bigger picture in the markets, and you will be good.